It took just 3 trading days in September so far for the S&P 500 to drop by 1%. Just for reference, last month, the first red month since February, we were down 1.6% for the entire month. So we've already almost matched that in just 3 trading days. Now, this comes as no surprise to me. If you've been following my channel, you know that I expected August and September to be red months, although I don't expect us to fall back into a bear market. Even though there are some really disturbing recession markers that are popping up now with the inflated price or the surging price of oil, which is now back near $90 a barrel, which is unreal. The fact that unemployment is going up and that housing demand has tanked, but we are also seeing a potential for services inflation to come back and for inflation as a whole to come back because of these rising oil prices, which really nobody expected Saudi Arabia to cut 1 million barrels per day, which was a voluntary cut until the end of the year. Now they're saying that they're cutting that because of the unpredictable demand that we are seeing out of China. But as we know, the oil cartel likes to control prices whenever it sees fit, but also services inflation, which has been the stickiest form of inflation, according to the Fed, according to economists. It is the scariest form of inflation because it is the one that cannot really be controlled by supply and demand directly. However, services inflation, as of the time of this recording today, we got the ISM numbers, and the expectation was that the index would come in at 52.5%, down 0.2% from last month's 52.7%. However, we came in unexpectedly higher, much higher at 54.5% in August. Now, I'm not going to get into the ISM calculation in specifics. However, it measures the service sector activity and is an index that the Fed uses to measure what services inflation is expected to be. Now, if you want to know my trades, my exact trades, and how I have positioned myself right now in this market, stay tuned because I will give you an update on that. But I do want to go over what the Fed is expecting CPI to be now, because if this is true, then this is actually scary for what the Fed might do with regards to rate hikes. For sure, they're not done hiking. For sure, they're going to do at least one more. So we're going to get into the plays, but let me first get into exactly what the Fed is now projecting for CPI. August CPI is now projected to be 0.79% month over month, and it pushes the year over year up to 3.82%. For September, it pushes it up to 0.45% month over month and 3.91% year over year. And if you remember, CPI bottomed in June, if you believe these numbers, at 3%. So now we are pushing back from 3% to 4%. And I don't know if I can tell you that this production cut by Saudi Arabia doesn't help because it is pushing the price of oil back to $90 a barrel. And the fact that the ISM numbers came out so high today when we were expecting it to drop, and services inflation has been the stickiest form of inflation. So the Fed will have no choice but to do something about it. And if you take a look at the Fed funds futures, this is how Fed funds futures traders are betting that how the Fed is going to act. Just a month ago, there was a 72% chance that the Fed would keep rates where they are now, and that would hold through November at least of 2023. Now that has dropped to only 50%. So there's a 50-50 shot that the Fed is going to keep rates where they are, or most likely hike them by a quarter of a percentage or 25 basis points in at least by November. Now, why is this bad? Well, because the more that the Fed hikes, the less predictable black swans become. When we take a look at recessions, it almost always comes down to the Fed hiking rates or yield spiking to levels that were not expected, and that the economy, like parts of the economy, will not be able to bear any further. We already saw the banking crisis earlier this year. That would have probably been our black swan had the Fed and the Treasury not stepped in. But we don't know whether there's something in the corporate credit sector, in the consumer credit sector, in housing, in corporate real estate, right? There's so many things that depend on interest rates to remain stable that when they go haywire, we actually don't know. If we knew, then we would be able to predict black swans all the time, but we don't know what might break. Now, I'm on record as saying that in terms of the market, and I promise I'm going to get into my plays in a second, but in terms of the market, I am expecting September to be red, but I don't think that we are going to go back into a bear market. However, I always give the caveat, barring some sort of credit event or black swan. So I can see if the Fed has to keep pumping rates and holding them there, that something will break that we are not aware of. And I'm not going to act like I'm Nostradamus and I know what that is. So as of now, I'm saying that my thesis for the S&P 500 for the market is still the same, but that the more that we raise rates, the more unpredictable the financial system and the economy, the more unpredictable they are, and the less they can sustain those rates held higher for longer, and something will eventually break, and that is how we get recession. Now, what could happen is that the market does see a retracement in September, right? And then we push past all-time highs and keep pushing until we hit a recession in 2024, and by the time we drop, well, it's not going to be that bad, right? Because we will drop to a previous high, and it's not like we're going to be dropping to the pandemic lows. However, what can happen is that the Fed raises rates, and shortly thereafter, we face some sort of credit event. Again, nobody knows. But if we do get the SPY to around the 410 to 420 level, I definitely will be a buyer, regardless of what happens in the future or thereafter. Now, speaking of the SPY, we put our money where our mouths are and we shorted the SPY. We actually did this all the way back. If you look at the original hedge was in August 10th. So we shorted the SPY. We're up 63% on that short. Loving it so far. We also sold the credit put spread. If you know anything about this channel, you know we are a huge fan of selling option strategies because you don't have to be 100% accurate and you get paid on a daily basis in the form of theta. We shorted the 260-250 put spread on Tesla, made 35% on that. Currently down on this Meta put spread here. We bought a Meta put spread thinking that Meta would tank. Instead, it is consolidating, has not yet tanked, and that is killing the spread. So currently down on this Meta put spread. And our Tesla cash secure puts are up $4,400 just about, depending on how many you sold, but they are up 75%, our Tesla cash secure puts. We also just hopped on the bandwagon with Warren Buffett and bought Occidental shares when they were back at 56 in June. Those are up 16% now, looking to potentially sell calls against our shares here. And obviously, we continue to day trade. We had an Amazon long from the bottom of the day today, closed at about 26%. So for 2023 so far, we are batting over 80% win rate on our plays. And we are launching Mastermind 2.0 on October 3rd, so make sure you click the link below. Get your ass on the wait list, because once waitlist spots are gone, they're gone, and you won't be able to apply until the next time you run the mastermind, which will be the following month. So make sure that you click the link in the description and get your name on the wait list of the mastermind. And if you wanted to join us on a monthly basis, you won't get access to the mastermind, but you will get access to all of our alerts, all of our day trades, all of our options, futures trades, long-term hold, etc. Click the link in the description below and join us. Put in the code DAYOFF for 50% off of your first month. Anyway, that's my analysis for the markets right now. Make sure that you are keeping your eye on the services sector. I'll be really watching CPI on September 13th because that could be a big one due to the huge jump in oil prices and the huge jump in services. Put a comment down below. Let me know what you're expecting. Subscribe to the channel. Hit that notification. Stay safe out there, traders. Peace.